our Instagram Live event. My name is Paul Arthur, and I am the founder of the Decentralized Web project. The topic of today is hypothetical but entirely possible total crypto market crash. Before starting of the event, let me tell you a little bit about our project. We are building a decentralized communication and advertising platform. Decentralization is a keyword here. If we are looking at the history of internet, internet started as a military project, and then it was transferred to the universities and science organizations in the 1970s. At that time, internet use was very decentralized. One university was communicating with another university, and one researcher to another researcher. Then in the 1990s, the web browser came, and it was the beginning of centralization of internet. Fast forward to the present day, and we have, in the case of Facebook and Google, billions of users going to a single website. This is very centralized use of internet. Decentralization is a new market, and it is going to offer an alternative way of using of internet. One of our project is one of the very few projects which are doing true decentralization. What do I mean by true decentralization? The understanding of most of the marketers, promoters, investors, and people involved into the space is that decentralization and next generation of internet relates to blockchain technology. I think this is very wrong. I'm technology developer, and I can tell you this is wrong. Blockchain technology is not suitable to drive decentralization. Basically, the technology is very cumbersome. It continuously grows in size, and it becomes a heavy burden for an individual to carry. So basically, the more successful blockchain becomes, the less decentralized it becomes. Like the access to the blockchain is becoming limited through like a very small number of nodes. In addition to this, most blockchains have limited number of transactions and limited size of the transaction which is posted on a blockchain. Internet deals with transfers in kilobytes, megabytes, or gigabytes of data. Blockchain deals with transfers of less than 100 bytes or less than 50 bytes of data. So what kind of next generation of internet are we talking through blockchain technology? But enough talking about blockchain technology. We still have a blockchain instance specifically for our project, but it plays a support role in our project. It has a store of tokens which are used for incentives for our users to people first time when they download our software, they become users and they get rewards in tokens. When they refer other people to our project, then they get tokens as well. They get tokens as well when they run a network node or bridge, our network node or bridge, and they can keep accumulating tokens. Successful project depends on marketing, and we have been posting on very long list of social networks. The list includes Facebook, Instagram, Twitter, Telegram, TikTok, LinkedIn, Pinterest, Reddit, and Discord. From this very long list of social networks, we're focusing on Instagram, Twitter, and Telegram. We're organizing educational events. Just like today on Instagram, we had an event yesterday on the same topic on Twitter Space. And these educational events are recurring. We're organizing them every week. Like every week, we have audio-only event on Saturdays on Twitter Space, and on Sundays we have them in video and audio on Instagram Live. In addition to the educational events, we have events every Thursday, and these events are happening simultaneously on Telegram in text only, on Google Meet, on video and audio, and on Twitter Space in audio only. Like these events, one week we have a meeting session and we cover things affecting the sentiment on the crypto market, in general about crypto, about blockchain technology, Web3, decentralization, central bank digital currency, crypto trading, and etc. Like I mentioned, one Thursday we have Ask Meeting session, and then the next Thursday we have a demo day. On the demo days we do a demonstration of our software and what did we achieve so far and what we have under development. And I like to bring to your attention one very exciting thing which we have under development. We're developing a marketplace for NFTs, and we're developing a collection, and we're planning a release very soon of a collection of NFT based on three-dimensional objects. So what is interesting and what is exciting about these 3D objects is that they're animated, they're moving by themselves, they're interactive. The user can click, the user can move them like left, right, up, down. They can zoom them in and out. They can rotate them. And then the object themselves, they have a voice. They're speaking. They can have either a male, female, or whisper voice. In addition to this, like they can have normal speed voice, and then they can have slow speed voice and fast speed voice. In addition to the speaking capability, this three-dimensional animated object, it has the capability of voice recognition. It can recognize voice commands. For example, if I'm the user, I can command it to stop moving, or I can command it to start moving. And I can also command it to like move left, move right, move up, move down, rotate. I can command it to, for example, say their name. And I can command it to change the voice to slow speed, fast speed. And the last capability, but not least, and probably the most interesting capability of this three-dimensional upcoming NFT object is that it is going to have a basic artificial intelligence capability. So, for example, one of the commands I can give the object is describe something. For example, describe decentralization. And then the object is going to uh, tell me a few sentences about decentralization. I can ask it describe Russia, and then the object is going to describe to me in several sentences the country named Russia. Wow. So what we have is very, very interesting. And so what we're going to um, be doing right now is we're preparing a few short videos which are featuring uh, like they're describing and they're showing the different features of these three-dimensional objects, and we're at the point of release of these videos. You can check and take a look at these videos and like get an idea what we have as upcoming release of a collection of three-dimensional NFT animated, interactive, and speaking and having artificial intelligence NFT objects. Wow, this is very, very exciting. In addition to this, like next week, we have demo day. You're welcome to come and join our demo day and see actually what is going to come and what is achieved so far in the project and the upcoming development with these 3D NFT objects. So enough talking about this. We're coming back to our educational topics, and like we started these educational topics about 4 months ago, 4 or 5 months ago, and like we're doing this weekly, and the topic of our very first event, which happened only on Twitter Space, was what is blockchain. The topic of the second event, which happened on both Twitter Space and Instagram Live, was what is a smart contract. The topic of some of the following events, which happened every week, one of the days on Twitter Space and then the following day on Instagram Live, was, for example, applying astrology into cryptocurrency trading. This was a very fun event. Central bank digital currency versus ordinary crypto, confrontation is looming. Decentralized finance destined to implode. Web3 or Web5, different visions and implementations. Decentralization engines, blockchains as decentralization engines, and other decentralization engines implementations. At the end of 2022, we had 2022 reviewing crypto. In the beginning of 2023, we had predictions for crypto in 2023. We had events relating to artificial intelligence, like current implementations of artificial intelligence and the path towards artificial general intelligence. Wow, lots of interesting and exciting events. Every week, like usually on Wednesdays, we have announcement of the upcoming educational event, and we're posting this on, like we're preparing a web page of our website, and we're posting this on all of our social networks. So, in addition to the announcement and the upcoming event, we have a list of the recordings of past events, and the list is very, very long. You can click and you can hear recording of the event of a specific event on Twitter Space on you, or you can hear and see the recording on Instagram Live. But enough talking about the project and our educational events. Let's come back to the topic of today: hypothetical but entirely possible total crypto market crash. This topic of today, it is relating specifically to the events which happened in the last maybe few weeks, maybe in the last 2 weeks, and the events are relating specifically to the bankruptcy of one or few of the banks. So if you did follow the financial news topics, you know that a bank called Silicon Valley Bank did file for bankruptcy. And this bank is actually an international bank. It has a presence in the United States, but it also has a presence in Europe, and it has presence in Asia as well. So what did trigger um, filing for bankruptcy of this bank and few other banks? Um, like banks which are accumulating cash, like they're accumulating deposits in fiat currency from businesses or from individuals. Banks, they have a choice of putting this fiat currency into several things. One of the things which they can put this collected fiat currency is into the government treasury bonds. These treasury bonds, they're um, issued by governments, and also they're collected by the central banks of the central banks of a specific country. For example, in the United States, there is the US Treasury bond, which they have a maturity between 1 month to 1 year. I think they're longer term maturity bonds, but what I read is that the original US Treasury bonds, they have maturity timing of between 1 month to 1 year. And a person or a business which buys a treasury bond, at the point of buying this bond, they have to decide on the period they're buying this bond for, the maturity period of timing. As I said, it could be between 1 month to 1 year. And so the maturity period is also coming with an interest with a percentage, which discount percentage, which the bond buyer can get. For example, at the beginning of the maturity of the bond for 1 month, for example, the buyer of this bond pays, if they say, like if there is a business which has $1 million and they're buying a maturity bond for this amount of maturity bonds for this amount of money there and then the percentage, the discount percentage is 1%. Then the buyer is paying actually $900,000. So it's like 1 million discounted by 1% of this amount. Actually, like the buyer is giving the bank which has this US government treasury bond and the bank itself they're getting $900,000 but then in the end of the maturity period which we said is going to be 1 year they have to pay the full amount which we said is going to be $1 million. The same thing applies for a longer period of maturity. For example, for 1 year, there is going to be maybe a little bigger discount. Let's say it is going to be 1.5% discount for 1 year maturity of a bond. And a buyer of this bond and beginning of this period, they're paying $850,000 and at the end of this 1 year period, they're getting back $1 million. So this is the way the bond market is operating, and so the bonds, they're a very, very secure investment because they're guaranteed by the government of a specific country, and they're guaranteed by the central bank of this country as well. The central bank essentially can print money at the request of a government, and they can print unlimited amount of money. Unlimited is hypothetical because in a normal country, if a normal country print too much money, then their national currency is going to get lower lower value compared with other national currencies. But in the case of the United States has the US dollar, and it is currently the global reserve currency in the world. So United States is in a unique position to print maybe unlimited amount of money with very little consequences of doing this. But all of the other countries, they have to be cautious when they are printing money because their national currency is going to lose value compared to other currencies. So enough talking about bonds. Why are we talking about bonds? Basically, the Silicon Valley Bank, which we started describing their bankruptcy, they bought US government treasury bonds for the money which businesses and individuals did deposit to them. So with these bonds, if we go back several years, in the beginning of 2020, we had global event which happened global. It affected the whole world, we had the event of a pandemic and COVID pandemic, and like governments which announced that they're going to print money and help the population of the country to cope with the pandemic. So what we had is very big issuing of money, and this money it uh, prompted a bull run into the financial markets, the ordinary stock markets, and into the crypto market. But in the same time, uh, like the interest rates for loans were very low. They were very close to zero, and like in some cases, like in Europe, by driven by the European Central Bank, some banks they did offer negative interest rate. So people they did not have any interest in like saving money, and they have incentive of borrowing money through loans because of the low interest rate. So this money going to the bank, they were put into bonds, and these bonds had a very low discount rate. So essentially, Silicon Valley Bank did buy bonds at during that time of the COVID pandemic to the present moment, and then they like they had very low gain on their purchase of bonds. Like the thing is with bonds that they're very secure. They're like people are assured of payment because of guarantee by governments and central banks. But the gains offered by using by government treasury bonds are actually very low. Um, so conservative banks they buy bonds because of the security, but they have very low gains on this purchase of the bonds. Um, so basically, like the with the raise, with the start of the increase of the interest rates, like there was an announcement, I believe around the end of last year by central banks that they were increasing um, the lending rate and the interest rate. Um, and like this increase in the lending rate and interest rate, it did affect the bond market. So the bond market, which bought bonds in the past, and they were getting like they still have to wait till the end of this period. They were operating at a loss because um, the interest rate percentage did increase, and they were going to get a lower amount. Um, they're going to get the same amount they put, but their gain was much smaller compared with the gain which could be um, achieved by the current interest rate. So basically, few banks they went into bankruptcy because of the loss of this gain and the raising interest rates. Uh, so like what we witness is specifically in the United States, like the U.S. Central Bank, it came to rescue of Silicon Valley Bank and few of the other banks, which they bought U.S. government treasuries. What the U.S. Central Bank, called the Federal Reserve, did is they offered banks which are holding bonds to have instant maturity before the expiring date of the bond itself. Basically, they said we are going to give you like the payment you're due at the end of the maturity period, but we're going to give you the payment right now. And in this way, if somebody did panic, you are going to have liquidity to cover this panic, and the rest of the people, they're going to see this example, and they're going to stop exiting, stop triggering a bank run on specific bank. So as I did read some opinion in articles about this move, there were very diverse opinions. One of the opinions was saying that it's like a simple and elegant solution, and I agree very much with this assessment of the action taken by the U.S. Central Bank, by the U.S. Federal Reserve. I agree that it is very elegant solution. But other opinions, they were saying that it is a bailout of one or more of banks, and then taxpayers are going to pay for this bailout. I disagree with this. This is not a bailout, because the central banks did not help with the principle of this amount. Early or late, they had to repay the principle of these bonds, and early or late, they have to give this money back to the depositors. So I think the banks or the central bank, they if they have losses, they have very small percentage, maybe amounting the difference between the lending rate before the increase of the rate and the current lending rate. So the difference could be maybe within 5% or 4.5% difference. So this is a very small difference, and in addition to the instant maturity, this instant maturity is coming with conditions, and the conditions are that the bank, the period of this instant giving of money to banks, instant maturity, the condition of this is that it is for a period of 1 year, and then at the end of this 1 year period, the bank has to repay the current lending and the current interest rate. So this is not a freebie which banks are given, but it is essentially instant liquidity at this moment, and it is covered by banks. If banks are coming to the US central bank and saying we want to cash out this bond instantly, then they can cash out this bond right away from um, the US central bank. In the same time, they have to agree to the conditions that this is for a period of 1 year, and then at the end of this 1 year, they have to repay the interest rate. So in this way, I believe the U.S. Central Bank, the Federal Reserve, did rescue the bond market, and the bond market can continue operating, and at the same time, the U.S. Federal Reserve has this their hands free and not tied up. They can do further raising of the interest rates if they wish so, in in order to curb inflation, which has been going up, and like to help people cope with the inflation, to let the inflation subside because of the increasing lending and interest rates. So if we're looking at the examples of some other countries, if we look at the example of Bank of England, what happened with the Bank of England is and the Bank of England is the central bank in UK. The Bank of England started raising the lending rates and interest rates with the same aim as the central banks around the world. So they did raise lending rates to curb inflation, but they had the same thing happening in the UK. Basically, a few banks they did declare bankruptcy because of the bonds they bought, and loss of gains based on raising increasing lending rates and interest rates. So what happened in UK is the central bank got their hands tied. They did announce that they're stopping increase of the lending rates and bond rates, and they did announce that in the future they could be having decrease of this lending or treasury bond rate. But following the example of the US Federal Reserve, they could do the same thing. If a bank comes to them, they can offer them instant liquidity before the maturity date, and then they can have their hands untied and free to increase the lending rate and the bond rate to curb inflation. So I believe this simple and elegant solution by the US Federal Reserve is going to be followed by other central banks, and they're going to essentially curb inflation. I hope it's going to curb inflation. But the topic of today's hypothetical but entirely possible total crypto market crash. what we witness in the crypto market is like one of the banks, one of the businesses which is very related to the crypto market is named Circle, and they're issuers of USDC, which is the second biggest stable coin into the crypto market. This second biggest stable coin, they are essentially collecting deposits in fiat currencies, and then they're giving people who are entering the crypto market, they're given USDC, this stable coin, in exchange for the US dollars which people are depositing. And when Circle collects this fiat currency, they're putting them into banks, and one of the bank which like Circle did put their money, fiat currency collected into, was Silicon Valley Bank. So when Silicon Valley Bank did a bankruptcy, like the Circle, they did have about $3.3 billion put into Silicon Valley Bank. This amounts to maybe about 9% of the total holdings of Circle. So what we witness in the crypto market is depegging of the USDC to the US dollar. So we witness a decrease of USDC from 1-to-1 peg, or close to 1-to-1 peg, to about 0.9 stablecoin, $0.9 dollars exchange for one stablecoin dollar. Basically, people exchanging stablecoin back to fiat currency, they were doing this at a loss of about 10 cents on the stablecoin dollar. So what happened with people which were holding USDC is like few exchanges, they froze trading in USDC, but few people did manage to use their USDC stable coins to buy other cryptocurrencies. So what happened is we witness a relatively big increase in the price of Bitcoin, and this increase in the price of Bitcoin is probably not a result of upcoming bull market, but by people exiting USDC and getting some major crypto coins or tokens like Bitcoin or Ethereum. So what could be following after this purchase of large purchases of coins and crypto coins and tokens is a sell of the Bitcoin or the Ethereum, and this sell is going to be into maybe not in Circle is in USDC, but it could be into USDT, into Tether. Basically, people could be fleeing USDC and switching their holdings to USDT. This is because the stablecoins, they offer protection against volatility in the crypto market. So this is especially necessary into a bear market where there are expected declines into the crypto, and it is safe to put money into the stable coins. But so if we witness the depegging of USDC, if the bank, the US Central Bank did not come into rescue for Silicon Valley Bank, it could have triggered failures in additional number of banks, and it would have triggered further depegging of USDC, fleeing of people to major coins, and then exit from these major coins to other stable coins like USDT. But the ultimate safety is exit from stablecoin to fiat currency. So faced with additional exit and faced with crashes of banks, so we have to consider that all of the other stablecoin providers, they put a certain amount of their fiat currency collected into government bonds as well. So they're going to be affected in the same way that Circle was affected. So essentially Tether and all of the other stablecoin issuers, they could be affected by the bankruptcy of banks themselves. So people who want to exit from stablecoins to fiat currencies, they could be facing the same issue which happened with USDC. They could be doing a depegging. But so in addition to depegging, essentially stablecoin issuers, they collected a very large amount of fiat currencies, and there are very few people who currently want to exit the crypto market, and these companies like Circle and Tether, which collected dollars and issued USDT, these businesses, they would not want to part with their collection of fiat currency. They would like to keep as much as they can of their fiat currency collected. So what they can do is they could declare bankruptcy because of the lots of people wanting to exit the crypto market, and they could declare bankruptcy not because of bankruptcy of the banks as a result of treasury bonds issues, but these companies like Circle and Tether, they could declare bankruptcy for the purpose of keeping of their collection in fiat currency, and preventing them giving back everything they have back to the people. Basically, people who wanted to exit the crypto market, they could get very little, if they want to exit. Few people, they could get the full amount, but as the number of people increases who want to cash back, then they're going to be having very little or nothing cash back from their holdings in crypto. So what if we're looking at the total amount of crypto like market capitalization, like we can take the example of Bitcoin, and let's say there are about a little more than 20 million Bitcoin coins mined. And so let's say the current market price for Bitcoin is about 25,000 stablecoin dollars. If we multiply 20 million Bitcoin coins by 25,000 stablecoin dollars for one Bitcoin coin, we are going to have 500 billion stablecoin dollars. And if we add the market capitalization of all the other crypto coins and tokens like Ethereum, Litecoin, Ripple, and all of the others, like we're going to have about between 1 and 2.5 trillion stablecoin dollars, the market capitalization of the crypto market. So like on the other end, like if we're looking at the total amount collected by the stablecoin issuers and like centralized crypto exchanges, which are also collecting fiat currencies, and they may be issuing stable coins. So we're going to have the total amount around 100 billion fiat currency equivalent of dollars. And this 100 billion equivalent amount is a collection not only of US dollars, but collection of euros, UK pounds, Japanese yens, and all of the other national currencies. So essentially we have a very, very big discrepancy between total amount of fiat currency collected and the total market capitalization of the crypto market, like about 100 billion in fiat currency dollars in fiat currency collected, and between 1 and 2.5 trillion stablecoin dollars market capitalization. So essentially, like this big discrepancy has to tell people who are holding virtual value in crypto that the possibility of cashing out of the holdings, it is possible for few people to cash the entire holdings of their crypto, but it's not possible for all of the people to cash all of their total crypto holdings. So in a hypothetical but entirely possible total crypto market crash, what is going to happen is maybe people, some small group of people wanting to exit the crypto market, and they could do by selling their crypto coin and tokens, getting stablecoin dollars, and then further requesting exchange of these stable coins to fiat currency. So the initial group of people can do this successfully, but then the second action could be by like the stablecoin issuers, like stopping and freezing this exchange. By stopping and freezing this exchange, like people are going to flee specific stable coin, they could buy other crypto coins and tokens, and then they're going to attempt exit through another stable coin. And the other stable coin facing the pressure, they're going to follow the example of the first stable coin, and they're going to do like maybe small initial cash out, and then they're going to stop as well, stop honoring the request to exit the crypto. So the stablecoin issuers, they're going to maybe declare bankruptcy to prevent the run on their holdings and to have their hold to be able to keep their holdings in fiat currency instead of returning all of their holdings back to people who did enter the crypto market through them. Basically, the total crypto market is going to be disconnected to the fiat market, and what we may be witnessing is rapid decrease in value, and most of the crypto may be going to zero, and few of the major crypto coin and tokens, they may retain maybe just few percentages of the current value. They may retain maybe 1, 2, 3% of their value before the crash. So this is the description of total. So that's a hypothetical but total crypto market crash. Whether this is going to happen or not, we do not know. But we did witness the pegging of one of the crypto coin tokens, and events like this are like they did affect the crypto market. It did affect people exiting USDC and buying, for example, Bitcoin, and it resulted in the increase in the price of Bitcoin. But this may be not a bull run. This may be not a significant increase, and we may be witnessing further decreases by people exiting, for example, Bitcoin, and getting USDT from Tether, going to the safety of other stablecoin other than USDC. So I'm going to wrap up the event, but thank you for coming. I like to mention that if you have questions or comments, you can type your questions in the chat section, and then I'm going to read this, and I'm going to respond to this question. But very soon we're getting towards the end of this event. I will be wrapping this event. For those of you who came a little later, my name is Paul Arsov. I'm the founder of the Decentralized Web Project. We're building a decentralized communication and advertising platform. We have a very, very exciting announcement of we're working on a development of a marketplace for NFTs. We are working on a release of 3D NFTs release, and these three-dimensional NFTs, they're going to be animated, they're going to be moving by themselves, they're going to be interactive, they're going to be speaking, they're going to be recognizing voice command. For example, I can command this object to do things, and this NFT object has a basic artificial intelligence capability. This is very, very exciting. We're at the point of releasing of videos describing this upcoming release. You're welcome to watch these videos, and also you're welcome to come to our day event, which is coming on this Thursday next week, and you can see a demonstration of these 3D NFT objects. But in general, we're doing extensive marketing. We're posting on multiple social networks, and we're aiming to build a community. Come and join our community. You can go to our website, which is decentralizedweb.org. Decentralized and web, they're all together, decentralizedweb.org. And on the bottom of every page, you can see the icons of the social networks that we're posting on. You can click on the icon and you can become a follower, or you can join our group. And we, from this very long list of social networks, we're focusing mainly on Instagram, Twitter, and Telegram. Come and join to one of these social networks or groups, and then you can find details of the very exciting upcoming release of 3D NFTs. Like I like to announce also the upcoming educational event, which is going to happen next week on Twitter Space on Saturday and Instagram Live on Sunday, and it is going to be about government surveillance and privacy and decentralization. So we're going to announce this on like Wednesday, but it is going to be about like government surveillance because of the benefits governments give to people, or because of the national security purposes. So we have a program of government surveillance, and it is a result of centralization of internet use, and decentralization can solve some of the government surveillance done on the people in the country. But with this said, you're welcome to come to our educational events. Thank you for coming to this event. We are going to have a recording of this event. Have a nice day, have a nice evening, and goodbye.